We are 1 week into earnings season, and a few stocks may be telling us what's up ahead in the coming weeks. My name is Victor. I have an MBA, a lot of business experience, and I like really analyzing stocks to see which ones are worth investing in. I like doing a weekly market update. And since we are in earnings season, I thought I could just show a couple of things that I'm seeing, and maybe you're seeing it as well, just that could be bellwethers of what's going to come in the next couple of weeks. Let me tell you what I'm seeing. So year to date, we're having a really good year. We're up on the S&P 18.6%. Great year so far, but we've seen this past week really show one sign. If we look at the last 5 days, we saw that the market actually went down, and it was predominantly caused by a couple of key stocks in the technology sector. The technology giants have really been fueling the rise in the S&P and the NASDAQ. So I'd like to take a closer look at those two stocks and also take a look at the market and see what would cause the market to go up further, or what potentially can cause stocks to go down in value as factors and either headwinds or tailwinds for the stock market. We are in a bull market. Anybody who denies that, I'm not sure what their definition is, but when we're up 18%, it's feeling like a bull market to me. And if you were to analyze where we're at, if we keep going at this rate, we're going to be at 33% for the year. I would love to see that. We've only seen anything like it twice in history, twice in the last 20 years. And really, for it to happen, for it to go up 33% is unlikely. I would love to see it, but it's unlikely. So that's one thing that I keep in mind as we continue to see this market just really go up and up. So there's a lot of emotion in the stock market. It's always been really interesting to me how emotional the stock market is, but let me go through that. There's periods of when there's a lot of greed, and it usually is met with stocks have been going up. Everybody feels good. You feel good that you look at your statement month over month, you made lots of money. Some of your stocks picks have really gone up. So you're feeling good. You're feeling enthusiasm and euphoria when maybe you were a Tesla stockholder and boy, that stock just jumped up, or Meta, boy, that stock more than tripled over 8 months. That's great. And I think we're somewhere in this neighborhood. It really does feel that way. And all the legends in investing believe it's not a great time to invest. It's not. It's actually a great time, in my book, to trim back positions, take some of those profits, take some of those gains, because the biggest money you make when everybody's in fear. And this would be like 2022. The good news about having a year when we had S&P down 24% is it's not that long ago. It's not that long ago that Netflix was down, like 70%. And people were just like, hey, what's going to happen to Netflix? They're just in trouble. Meta, they couldn't do anything right. People just were in such fear. They were like, man, what's going to happen to Meta? It's just a terrible company. And both of those companies were a great buy not too long ago, less than 12 months ago. It was a great time to buy. So this is when I want to buy stocks, when nobody wants to buy them. So I can buy them and then they go up in value. I get huge discounts on my stocks. But unfortunately, we're not in that zone. I believe we're in this zone with, I think, the wrong things happening. The stock market can really go down. So there's some factors that can cause the market just to keep going up, and some factors that can come in and make the stock market come down. So first, the factors that can push the market higher, we have upward momentum. It has been an upward momentum market. The FOMO, fear of missing out, is in effect. So a lot of people can enter the market because they've seen that, hey, my stocks have been doing great this year, so I'm going to put more money into the stock market. If we have really good earnings reports, and for good reason, stocks will go up, and interest rate increases will stop in 2023. I think there's complete, agreement that we may have one more rate hike and that's it. And then we might even see rate hikes or rate reductions coming in 2024. So that's what could push the market higher. Now, if the earnings reports that we saw from Netflix and Tesla, and I'm going to get into those in a minute, those caused a big sell-off in those stocks. And I think they had collateral damage to other stocks in tech. And I am beginning to pick up a vibe in the market where if a company has decent earnings, and I thought the Netflix earnings were okay, as well as Tesla, if they're just okay and they have any flaws, then the market's selling off. Now, if that continues, we're going to see a significant downward pressure on stocks. The other factor, we have a recession, and this recession, boy, it's been one that's been, expected at this point for like a year and a half, but it's been however it's done it, it's been avoiding the true, reading on recession. We haven't had high employment, but certain industries are really struggling. Certain industries are thriving. So is this recession going to happen? If it does, I think that can weigh down stocks. And then higher interest rates are pulling money away from stocks. If you do feel like I've been feeling that, hey, the market's priced really high, there's very few discounted stocks out there, but hey, I can earn 6, 8, 10, 12% in a bond. Boy, that's pretty attractive rate of return. And I can put my money away for a while until stocks kind of come down in value. So that is going to pull money away from stocks. Keep in mind, the bond market is much larger than the stock market. The bond market is where governments and big institutions put their money in. So it's not like, hey, bonds are this instrument that isn't used all that often. It's an instrument that pulls more money into it than what is invested in stocks. Tesla has been doing great in 2023. Year to date, it's up 140%. So great job, Tesla. It's a great company, and their stock has just been exploding. But recently, they had an earnings call, and the earnings were decent. They were not like, hey, they were growing the revenue. It continues to be the leader in electric cars, has so many great innovations. It's just a really good company. But their earnings did not really match that euphoria that investors are expecting. And the stock tumbled more than 12% this past week. Now, if that continues, I think, Tesla can lose quite a bit of its market cap. So let's talk about Netflix. Netflix, year to date, 45% return. Awesome company. They've just had a really good year. They announced their earnings this past week, and their stock tumbled 11%. Their earnings were good. Revenue grew. They were profitable. They generated free cash flow. All the things you want to see in a company. But I just think the stock price had gotten too high. The true value of Netflix is lower than the stock price. And I think when investors recalculated their value of the company, they realized, hey, I'm sitting on a stock that's just priced too high. And if companies that are issuing out positive earnings growth, profitability, have this type of effect after their earnings, it may be telling us that the coming weeks may have more of this, where you have Alphabet, Google is announcing this next week. They may announce, good earnings, but not, monumental earnings, and their stock may drop. Meta is announcing this week. Same thing. Their stock is up a tremendous amount. So I'm picking up on this particular trend, and it's just the beginning, so it could change. But if we see more of this, we're in for a really good drop in stock prices. Well, let's see where we end up at the end of this week. I'm expecting that we are going to be down this next week. I would say that we're going to be down because the stock prices have gotten way ahead of valuations. And I think once investors, especially the big institutional investors, recalculate the value of these tech stocks, the market will go down. We'll see. Hold me accountable. Put in the comments as you see the stock market move this week. If I was wrong, I'm here to take whatever comments you'd like to provide, and tell me what you think is going to happen this week. It'd be interesting to see where people's heads are and if they agree or disagree with what I'm expecting. Thank you for watching the video. I hope you enjoyed it. Keep in mind, this is not investment advice. It's just for entertainment and educational purposes. I like sharing my experience as an individual investor, and I hope you found it interesting. Good luck investing in 2023.